Hey folks, welcome to Pro Trader Strategies. My name's Eric Wilkinson and this is Spotting the Trade. Before you guys go, make sure you guys go down there and subscribe. There's a little bell right next to that subscribe button, folks, that gives you an indication as to when I'm popping in here unannounced. So if you want to participate in that, when I'm finding a trade, I come on unannounced. Make sure you have that little bell lit up over there for you so that you guys get a notification when that's happening. All right. And throughout the video, feel free to comment. I'm keeping my eye over there in the comment section to make sure everybody's clear of concept. So if you want to go over something again, talk about a specific underlying you're looking at, throw it over there. I'll be happy to go over that. All right. So with these videos, I'm going to talk about the economic data, how that impacts the overall markets, and then round it off with some trades that I'm looking for in the markets to implement into my portfolio. All right, so if you want to get on with that, let's do it. Smash that like button before you go. Feed those bots. Runs out there and find somebody just like you for me. All right, so across the pond, what do we got? Not a whole lot to see there, but here in the United States, we did get existing home sales. Now, a couple of things with this number. We've been seeing the home sales numbers ratchet up a little bit. Maybe some of the supply chain issues causing problems with the new home building, and that has to do with workers and all of that stuff. So the newer homes, we're seeing some supply problems there. Well, that's getting people to buy existing homes, right? If there's no supply for new homes, well, you're looking for existing homes. And we saw that uptick, albeit just slightly, to 5,880,000. It was right in line with expectations there. But something to note there, existing home prices have increased for the last 111 months, folks. Existing home prices have increased for 113, or maybe it's 112. It's 113 months. Home prices have increased. There's your little door there. Prices are increasing for the last 113 months, folks. That's almost 10 years. Every single month, prices increasing. As a matter of fact, some places like Boise, year over year, are seeing 26% increases. Here in Arizona, it is somewhere like 21% year over year. So home prices continue to ratchet up, and that is mostly due to the fact that we are seeing some supply chain issues and workers not showing up for construction jobs. That's also very difficult. What those folks are talking about with the homes is that they're seeing some of these prices of the raw goods going into this elevated. That's part of the issue. And then they're having to pay workers more just to show up, because we've seen this problem where we aren't at full employment, but there's jobs out there. Folks just aren't going and looking for that job. So that is a real tug of war with folks that are trying to create a business, and those workers just, they're seeing those prices go higher and productivity go down, which is not something we really want to see with markets. All right, so I am sharing. Crude oil is moving a little bit higher here. Not a whole lot of economic data to push these markets around. What we have is the FOMC a little bit later on today. So I think it's going to be more hedging position and shoring up ahead of that. What is the FOMC going to say today? Well, I don't think they're going to say a whole lot. They're going to be folks, traders like you and I are going to be focusing on the taper. When are they going to start talking about the taper? Well, I think they're going to push this off to let's talk about the taper in November. I don't think it's going to happen anytime soon right now, especially with what's going on in China, Europe, the Delta variant. All of these things are headwinds for the economy. We've seen some kinks in the armor for the economy with the manufacturing. Yes, we have seen an uptick in some of those manufacturing numbers recently, but broader, we've been seeing some weakness here. And hopefully we'll start seeing that change a little bit heading into the later parts of October, November. And that's when we're going to start seeing manufacturers ramping up for the holiday season. Now, having said that, the holiday season is going to be a little bit difficult because of the supply chain issues. There are boats anchored like with thousands and thousands of cargo containers on these ships, and they can't get offloaded. The ports are just overwhelmed with trying to offload this. And then if they can get it offloaded, the trucks that come in to pick up those cargoes or the cargo tanks, cargo why am I drawing a blank on this? The containers, those can't be picked up because there's such a backup trying to pull those out of the port. Okay, so there is all kinds of levers and pulleys that are just going bonkers right now. The ports really need to open up and go full tilt 24/7 for now until Christmas. I would have to say at least, maybe even for the next 6-8 months, in order to get all of the supply chain issues back online there. All right, VIX coming off, and that's because we're seeing the equities make a bit of a move. Yesterday, something I was looking at late in the day is with this chart here, and something to note. I don't usually look at this well ahead of time, but there's something here I think that is worth keeping an eye on, and that is the head and shoulders pattern for the equities here. And what we're seeing here is we've got, we're going to say it starts right around here. You could say the shoulder really starts in here, but I'm going to say this is the first shoulder here, the head. We've got this neckline. You can see I've drawn in there. All right. So we bounced off of that neckline. What we would expect is this underlying to move higher. And if it breaks through that neckline again, then that really is going to look like we're going to revisit this 2017 trend line here. So keep in mind, that's the trend line for 2017, 2018. Those lined up pretty darn nicely, and that has created a beautiful trend channel here. So if we are looking for the head and shoulders, there's the left shoulder, the right, the head, and then the right shoulder there. If it breaks the neckline, that is your pattern setup for a bearish move, and we would look to revisit this trend channel and maybe even 14,000 even. Okay, so looking for a head and shoulders build up there. So this type of bounce, you might see a lot of people talking about it getting back up and over this 50-day simple moving average, and that being a bullish sign. Well, keep in mind, we've got this pattern setting up. It would have to break above that head, that topping head pattern, in order to really break this whole pattern. Okay, so that would break that head and shoulders if we go above that high of 15,700, let's call it. So keep that on your markers, because a lot of folks are talking today about the markets making these moves and not really seeing that. What just happened here? Did that not want me to, I closed my pen off. All right, now Dow Jones Industrial Average, you guys have heard me talk about patterns like this, or at least candles that look very similar to what we're checking out here. And that is something that, usually we would like to see this happen at the bottom of a move and create that bottom there, yesterday's pattern, because anytime we get that kind of doji that looks like that, that is a solid bottoming pattern at the bottom of a move or at the top of a move. We're looking for those kind of candles in these types of setups. Now, not quite perfectly set up, but it is looking pretty strong again for a bullish move back towards this point of control. Possibly is going to be a magnet. You guys have heard me talk about that, but keep an eye. If we see that NASDAQ starting to roll over, we could see this one start to roll over as well. No real head and shoulders pattern here. Is very messy. I wouldn't call it that. You could call it a lot of other things, but it's definitely not looking like a head and shoulders pattern. Keep your eyes on here. Not a beautiful setup like you write a book about, but that is definitely looking like we have confirmed a bit of a bottom here and a little bit of a rise here. And folks, we do have a tendency to see equities rise ahead of the FOMC meetings, okay? And I think we're going to see that happen again today as the equities start to shore up, or folks are trying to shore up positions ahead of that data point there. All right. Still haven't quite figured out all of this new little thing. And if you, something to note with all of the equities, we can go back and look at this. So E-mini S&Ps, I was getting myself a little bit confused today when I was flipping through the charts because I couldn't tell what the difference between the Dow Jones Industrial Average, the E-mini S&Ps was, or, well, the NASDAQ looks a little bit different, but you can see that all of those patterns very similar in nature at any given point. So equity is making this little bounce happen. Is it going to be one of those dead cat bounces where we just get a little bit of a pop and then revert back into this bearish move like we're talking about with the NASDAQ creating this head and shoulders pattern here. I don't know if we're going to see that yet, but that's the way I'm leaning. We get a little bit of a bounce here, and we're going to revisit some bearish trends here for at least the next couple of weeks. I don't know that it's going to last forever, folks, but there's some headwinds here in the news that I think is going to give buyers a little bit of pause here, all right? They might start flipping to thinking about selling puts in an environment like this, which is what I've been doing, right? We've seen this volatility spike huge in the last couple of days. Well, this volatility is coming out almost as fast. So if you haven't had the gumption to jump on some of these trades, you need to be looking at high volatility opportunities right now. All right, E-mini S&Ps has been strong overnight. Economic data that came out today, crude oil inventories drawdown of 3.5 million barrels, something I wanted to talk about during the chart with the crude oil. Well, it's in line with expectations, so it wasn't really a really market mover, but the existing home sales, a lot of the tailwinds today are the FOMC. The existing home sales were very good. And I think the FOMC is going to hold off on talking about a taper, and that is going to give us some upside momentum here in the equities for the rest of the day anyway. SPY, we talked about this. I added on a iron condor in here, a long iron condor. It's very close. I need a little bit more downswing here. Looks like this market in the SPY wants to cover this gap. But again, a lot of these markets, this isn't really a head and shoulders because you don't really like to draw a neckline too negative. But, you know, one could say that this is starting to look like a bit of a head and shoulders here as well, where you've got your shoulder, your head, and trying to create another shoulder here with a move to retrace. Okay. And the neckline kind of at a negative angle there. But again, still kind of head and shoulders-ish with that type of setup. All right, Wynn, I blew past one of the other one. What was the other chart I was just trying to check out? Gold. Gold making that move back to the point of control. And if you guys remember, just yesterday, I went in there and was looking to sell some puts and sold those at the not the 79 strike. They were the drawing a blank. Everything's struggling today with the brain. The gold futures, JDXJ. Why do I have gold in here? JDXJ was the trade I'm totally cramping on. JDXJ was the junior gold miners we were looking at yesterday to add to the upside. JDXJ, DXJ. My pit. Okay, I guess I need to change the batteries in my thing. JDX. You're killing me here, screen. DXJ. G-mini. There we go. Gosh, sorry, folks. So yesterday we got the bottoming pattern confirmation pretty much. Yeah, one would say a red candle isn't necessarily a confirmation, but we got to follow through again today. So I'm still in this trade. I went in yesterday and sold the October 38 puts in there. And that's when we got this spike in volatility. You can see it was up around, what is that, 43, 44? Well, we've had about 4 or 5 percentage points come out of this underlying premiums, okay? And with that said, if you got like 5 percentage points coming out of volatility in JDXJ, well, that's going to account for basically 15 cents out of that 5 percentage points. My Vega, if you look at it in the October, is around 3. So 5 times 3 is 15 cents coming out of this trade for just that volatility alone. Now, I'm pretty close to where I was when I put on this trade, maybe 50 cents to $1 higher. So that's helping out as well. The delta on this is 23. So if I'm about 50 cents higher, it's another 10 cents there. So all in all, everything working out with this trade right now for JDXJ. Sold those October 38 puts at 79 cents. And right now I'm actually working in order to get out of those for the 50% of max profit in there. So around 35 cents. I'm ways away from that right now. It's trading around 58. But that's 20 cents coming out of that trade. 15 cents of it is in just the volatility coming out, and about 5 cents, maybe 10 cents coming out of it in the directional move. All right, so a positive directional move helping me out. But really what I want to focus on this was we got involved in this trade when volatility was extremely high, turning the probabilities in our favor. If somebody had gone out there, folks, and bought a call to get this bullish move with this volatility, because that's what somebody on TV was talking about, some unusual option activity. Well, folks, that's the wrong strategy. This volatility coming out has offset the directional move. Stay away from those kind of pitfalls. When folks on TV are talking about buying options, make sure you understand the levers and pulleys in the markets, all right? And if that's helped you out, smash that like button for me. Feed those bots. I don't see any comments over there as of right now, so keep moving along. But if you do have any questions, comments, or want me to cover anything, throw it over there at the side there. All right, so JDXJ making a bullish move to the upside, volatility coming out. Those things are helping me out. And then the other one I wanted to talk about, I think, was Caterpillar. It's just, we talked about it being overdone. Oh, my God, my computer is driving me nuts. I feel like I have to hit it twice every time. So volatility also coming out of this trade. Remember, we went in and sold the October puts at around the 170 level, collected about 90 or $1.50. It's trading around 97 cents. I'm trying to get out of this trade for about 50% of max profit. So if I collected $1.50, I'm trying to get out for about 75 cents. Now, you can see I did get some of the directional move in my favor, but again, we're keying in on this volatility crush coming out of this trade by probably 4 or 5 percentage points again here as well. 4 percentage points, let's call it. So 4 percentage points, that's about 10, 15 cents coming out of this trade already just due to that volatility coming out. So trying to turn the probabilities in our favor when we're setting up option strategies. We don't always just go out there and buy a call for a bullish assumption and buy a put for a bearish assumption. That's what everybody else does out there willy-nilly, and then we can take advantage of that, because if they're buying unabated and not even thinking about pricing because they're panicked, well, then we have our wits about us, and when everybody else is panicking and you have your wits about you, that's when you are going to become a successful trader and take advantage of everybody else's missteps. All right, that's all I got for you guys. Before you go, make sure you smash that like button, feed those bots, send them out there and into the web to find somebody just like you to help out. Also comment. I'll circle back around, make sure everybody's clear of concept. And finally, smash that subscribe button, and right next to it, there's a bell, because when I come on unannounced, you guys will know exactly when, where, and why I'm coming on, because I'm going to be talking about a trade that I find right then and there, and I want to make sure you guys are in on that. So smash that little bell too. All right, that's all I got for you guys. Check out tomorrow's webinar. We're going to be doing it on the pop or drop, when you can set up a strategy when you see this underlying just trading sideways and you're thinking, hey, this thing's due to make a big move. I don't necessarily know which direction, but I'm going to try and take advantage of that. Similar to what we did in that SPY trade that I did last week in the webinar. It's working out quite nicely, as you've seen that big move this week. All right, so that's all I got for you. If you can't take that, take it easy. Bye for now.